Hello, traders. Gary Wagner here. It is approximately 12 noon in Honolulu, making it 5 o'clock in New York City. It is the first day of the week, Monday, the 16th day of January, 2012, and this is the daily report for gold and silver. We have both gold and silver, in my opinion, attempting to form a base, consolidating in an area that I believe will be a sounding board, a point in which these markets in high likelihood will begin to take off and trade higher. First thing I want to look at today is going to be our gold charts, both in Henkin format as well as standard candlestick. We'll start with the Henkin. We have our weekly up here in the upper left, as you can see. And then we have our daily beginning at the lower left, and we'll go ahead and widen that up a little bit. And as you can see, what we have seen in this market is ever since we have had this market go to the bottom of this correction, what I'm labeling as the final and C wave, we hit a low of approximately 1525, and the market on a daily Henkin basis really has not looked back. When we take a look at our weekly chart, and you can see I'm running a Fibonacci retracement all the way back to 2011 July, and that's when, 2009 July, and that's when you had this $900 gold just coming off of 1,000 here, and you had here just coming off of 1,000. So you had your first place for 1,000, you had a correction, and then the market really started to take off. When we take a look at that, you can see that from the move of about 900 all the way up to 1,900, $1,000 move, we got about a 38% retracement off of that larger move as effectively the bottom of this correction. You can see this double bottom right in here, and the fact that this 38% retracement, 1533, kind of matches up. And the reason I pegged it here is you can see the market had been trading not fairly sideways because it's a compressed chart, but had been trading in a smaller range, had been breaking above 1,000, then just kind of moving below. And then this is the point in which it really begins to take off to these new highs. You can see those right in here. Consolidates, new high, new high, new high, and of course record top right in here. So that by looking at the market from all the way back here, you can see that this was really a point in which it really genuinely took off. And I also think that what you're looking at is a cycle within the Elliott wave, and this double bottom in terms of its Fibonacci retracement, I think, is more than valid. When we take a look at our daily chart, let me go ahead and blow that up here, you can see that although I had some real concern on Friday that what we might be witnessing would be the first of a subwave correction, meaning 1, 2, 3, 4, and 5 like that, there is no evidence, none whatsoever, that we're getting any kind of follow through and that we're going to witness any kind of a correction just yet. That could change on a moment's notice, there's no doubt. But as you can see here, first we had the doji candle right in here, and this, which was red at the beginning of the day, now has turned into a green candle, but nonetheless green. And although the range is very, very short, it is a range with no lower wick. Now, that's going to change a little bit when we go ahead and remove the Heikin-Ashi and convert it into what we call a straight candlestick chart. Because you can see on a straight candlestick chart, we really get the market closing well off of the lows, currently trading, as I said, 1643, and that's right in the middle of this area here. But we did have a down day the other day. We did have that market correct a little bit. Now, is that enough to call it a correction itself? I would have to say probably not. When you look at it, if we simply look at a Fibonacci retracement from the bottom to the top, what you're going to see, though, is quite interesting, because let me go ahead and extend that, and then we want to widen up 23, because that's going to be the point in which you will see this marketplace itself. And once I put in the Fibonacci retracement, let me just line it up a little bit better than it is. What you can see is that the 23% retracement of that point would be about 1629. This low here, I believe, is about 1625. So does it meet the criteria of the first kind of a subwave? That's really hard to say. We'll have to take a look at it later. In other words, is this a valid count like this? And then back up like this. That would be hard to say. Typically, you want to see a 38% retracement, and absolutely, you're not getting it here. Now, when we take a look at the weekly chart, and I have converted it from our Heikin Ashi to a candlestick, and you can see that, of course, we're at the beginning of the week here, but we still are showing some nice progress to the upside. So, what about silver? What are we seeing in silver? And again, with silver, I want to look at it basically in two different ways. I want to look at it first as a Heikin Ashi, meaning the average, and then we'll go ahead and convert it. And I also want to start with our weekly chart, because what I'm finding that is, let's call it noteworthy, is that this resistance, this is 3084. We talked about this as having some resistance and being an important pivot point. What we do see is that the high was just shy of that point. But when we look at this in terms of a Heikin Ashi and a weekly chart, there can be no doubt that it seems that we have hit our pivot point, that we are moving back up after hitting this low at 2606. Let's go ahead again and convert that. And as you can see, I have gone ahead and converted it to a standard candlestick chart, and actually looks fairly similar in there. But in terms of the weekly, it does look as though we have a good uptrend fully intact. When we look at our daily chart, Heikin, it is showing us, this is, of course, is the March contracts of COMEX silver, 29.94, two dojis, showing us once again potential consolidation before taking off again, or potential consolidation before hitting a pivot point and going lower. Only in the metals markets have I witnessed these dojis appear in such abundance before a higher spike as well as a reversal. So we'll have to wait and see, but I do think it will follow in tandem with gold. Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.